Welcome back. The clock is about to strike 9 and we invite our good friend Anuj to tell us what he's expecting of the market. Anuj, waiting to hear you.
Well, Lataf, good morning. For starters, the SGX Nifty is indicating a start around 18,000. But if you see the market's pattern, it's gap up, consolidation during the day, and then 3 p.m. rally. The 3 p.m. rally normally happens because you are expecting a gap up. So on Friday, for example, you saw that 3 to 3:30 rally. Again, expecting this, and this is what traders get. FI has bought for 2 days in a row. And I think this is where an interesting thing has happened this morning. The Brazil election result, I think, is extremely important because Brazil has elected a far left president, Mr. Lula, right? He was the president between 2002 to 2010. And you see how Indian market did in that period compared to what Brazil did. And you will notice that there was far outperformance for Indian market. And Brazil is very similar to India in terms of demography and democracy, etc. So that also China has been uninvestable, Russia has been uninvestable. So in that sense, India is now perhaps the only sort of pocket in BRICS where you have investment, and that's why I think what you have seen maybe a start of some kind of ETF inflows. 2 days doesn't decide a trend, but if we get 2 more days like this, I think this market might be in for some really good times because of the FIs. But for today, 17,800 call writers, they will be in trouble when the market opens. The premium was 120 rupees, so 17,920 to 17,950. I refuse to believe the SGX Nifty rate. I think we will not open above 18,000. I think we will open somewhere around 17,900, 17,920 thereabout. So in that sense, 17,920 to 17,950 becomes your range to watch out for. If Nifty goes to 18,000, my sense is the algo traders will book profit. That will be a good zone to take money home. And then wait for, again, that intraday decline, which normally comes in the market. Rinse and repeat, buy at around 3 p.m. and prepare for another gap up. This is the pattern of the market. And my sense is that it may continue for some more time.
That's a brilliant point, Anuj. In the BRICS, actually, Brazil, Russia, China, South Africa are practical uninvestable. Even South Africa has not been, very positive for ETF investors. So this can be an extraordinary stage for outperformance and FI inflows into India. And there's every reason, both fundamentals and earnings have not disappointed as far as India is concerned. But let's wait and watch. We have to see how the global scenario, the FOMC meet pans out. Prakash Diwan is still with us. Prakash, there were a bunch of results that came, power company results as well over the weekend. Anything stood out for you?
So, Lata, the NTPC number, NTPC numbers might operationally look like a miss, because of, the kind of costs that have gone up and escalated. But their ability to hive off the renewable business at some decent valuation and scale that up as well is something which you shouldn't ignore. So I think the numbers will probably give you an opportunity to buy at a flattish kind of a start, but that's the pocket to look at. And in any case, discoms have started giving back money to most of these gencos and within that 45-day time band that the government has stipulated, which means that they'll get much more stronger on the balance sheet over the years, and that's what they need to scale up. So I think that is an area you could look at, and of course, within renewables you have hydropower and all, which also is kind of smartening up. But there's nothing to do with the results, but that's the pocket to be in at this point in time.
All right, we take that point, Prakash. Just hang there. We have the rail PSUs, which were in focus over the last couple of trading sessions. We've seen a bit of a spike in there, and this ties in with the view that market veteran Ramesh Dhamani gave us during the Diwali conversations that we had with him. He said he's betting big on railway PSUs. Let's hear him out before we have an analyst join us to discuss this space itself. Ramesh Dhamani's.
Railway PSUs, you look at the basket of railway PSUs because these are the blunt instruments the government is going to use in order to express their capital expenditure over the next few years. So I think there's a great opportunity in those stocks. There are 4 or 5 listed. I'll name them, but I'm not recommending any of them. RailTel, RVNL, RITES, to name a few, IRFC, to name a few. I think if we just go and study those, I mean, you may not want to buy them, may want to buy them, that's a call. But I think as an analyst and as a value picker, you owe it to yourself to at least go through and study them.
Okay, all right. Well, that was Mr. Dhamani. Well, let's get in an analyst. Harshit Kapadia of Elara Capital joins us. Hi, Harshit. Morning. Thanks so much for joining in. Well, you heard what Mr. Dhamani had to say. What's your view? I mean, from this space itself, railway, there's tremendous potential. What's your top pick from here and why?
So within the railway PSU, we like Rights Limited as well as RVNL, which is covered by my colleague. And IRCON is something that we also like. So these are the three EPC companies that we are very positive as far as rail infrastructure capex is concerned.
You know, Harshit, you're picking up those that have done well. This year, if there is any green on the railway stocks, it is RVNL and Rights, as you point out. I can understand IRCON being the beneficiary of any rail infra, but you would therefore not touch IRCTC. I mean, that was the one that came with a lot of promise.
Yeah, it did came with a lot of promise, but there were issues when it came to, sharing of fees. I think that was one of the errors which was done by the Ministry of Railways, and possibly after that, investors were skeptical whether such kind of news can again come and can hamper the business model of the company. Though I don't cover the stock or I don't look at it, but it's the update that we understand from.
Okay.
That is one of the key risks that that faces IRCTC. But Harshit, I wanted to know if your thesis is that rail capex will increase. Would you also bet on some private players and not just PSUs? Are there any listed companies which we do know of a few who do supply to the railways? Do you think there is some which could get some outsized benefits here?
Absolutely. So apart from PSU, any component manufacturers of railways are also bigger beneficiaries. So within that space, so I also look at capital goods. So within cap goods, we also like CG Power, Hitachi Energy. There is ABB Siemens, who also have a good portfolio on the railway side as well. So these are some additional names which can be looked at on the private side. Apart from that, even Titagar Wagons and Texmaco Rail are direct beneficiaries of expenditure on the wagon side. So recently, government had come out with a tender for 75,000 wagons, and these were two of the major beneficiaries. We are also hearing more tenders are expected on the wagon side. So as when comes, they could be further beneficiaries of this railway capex.
Okay, you spoke about RVNL and Rights, right, as LRR's buys. Any price targets for the one that you track? I think yours is Rights, correct?
Yeah, absolutely. So I look at Rights. My target price has been breached. So my target price was 330 rupees. So it has already breached that number.
Okay. And therefore, now what? You have an equal weight? You wouldn't go ahead and buy it right now?
I would certainly be on a whole stage at this point in time. Would want to look at it in terms of how, because export is one thing which we were banking on. So as and when the export portfolio of Rights improve, surely there will be a multiple rating and there could be on a higher side.
Got it. And you have a price target for IRCON. You said you're positive on that as well.
Yes, we don't cover IRCON, but certainly given that these three PSUs are largely EPC players who have some sort of a business coming from EPC as the rail capex improves. So these three are the ones, but we don't cover IRCON.
All right. Got that. Thank you very much, Harshit, for giving us a little more color on what we can expect from rail stocks and which one we should watch out for. The important point he adds is, besides the couple of PSUs, RVNL, Rights and IRCON, the private sector rail stocks like Titagar are also, and Texmaco are also on their buy list. Prakash, you want to look in on any of these stocks?
So, Lata, I think, these stocks have certainly kind of come center stage after Mr. Damani's quip on that. But,
yes.
Sometime back we had spoken about RailTel and in one of these shows in the morning. And the reason I had put that out was, and that was sub 100 zone, I think 97 or something. The reason I liked this, and I continue to like that, is it's probably one of the unique assets that the railway has, and it hasn't been sweating as much. But now with the telecom revival of sorts, I think it could probably look up very positively from here on. It still has enough value for the long-term investor.
Okay. Thank you very much, Prakash, for being with us through the morning and hand-holding us with respect to several stocks in the advice on it. Have a great day and a great week ahead. Okay, and now for the markets have kind of settled, and as Anuj predicted, it's nowhere going to be above 18,000. The stocks are more, the Nifty is more like 17,910. That's about 0.7% higher and about a 270 up on the Bank Nifty as well. Sudarshan, I guess the Nifty call still is to keep staying long.
Well, that's right. It doesn't matter what the gap up is. The trend is up. Stay long in the Nifty or be long in the Nifty. And HDFC is a buy with a stop under 23.50.
Okay. Thanks for that, Sudarshan. Have a great trading day yourself. Mitesh, your index and stock call?
So, Lata, on the index, short-term traders can look to book profits once we get closer to 18,050, but for the time being, maintain longs. And on the stock side, Bosch is a buy at the stop below 15,950 for targets of 16,550.
Okay, Mitesh, can you give us a call on Maruti and DRL? I mean, they're bound to start higher. They are starting higher. Is there a strategy on any of them?
Lata, I think Maruti is something which is very interestingly poised. The all-time highs for the stock were 9,700. That was in 2017, and the highest monthly closing was around 9,472, and we are just above that. So I think this is breaking into all-time highs. This breakout should see Maruti head towards 11,000 plus levels at least, and maybe even higher. So I'm very, very positive over there. DRL, on the other hand, I think is clearly more of a trading bet for me. It's reversing from lower levels, but around 4580, 4600, you might find some supply. And in case the stock clears that, then I think the stock might actually head towards levels of 4725.
Okay. All right. Let's talk about a couple of results that came in. Bandhan Bank was one that came in the dying hours of trade on Friday. Looked weak, and now the weakness continues in the stock price as well. Pre-open, it settled about 2% lower. Abhishek joins in with more on the results. Abhishek.
Well, brokerages are worried given the fact that, Bandhan underestimated the EEB stress pool, that is the emerging entrepreneurs business vertical that they had, and is taking longer than expected to shrink that book. So they expect the EEB stress pool to get mostly written off by FY23. The provisions will remain elevated in H2 FY23 as well. The earnings will normalize in FY24. So they remain watchful of high SMA, that is special mention accounts, as well as asset quality of Bandhan Bank. So credit cost guidance by the bank has also been increased to about 3% for FY23 versus 2.5% that they had earlier. So low brokerages across have lowered the net interest margin, while they have also cut the earnings estimate. So the cut in earnings estimate for FY23 ranges from as low as 13% to as high as 50%, which is by Jefferies. And for FY24-25, the earning estimates have been cut anywhere between 7% to 30%. So brokerages have cut target price on Bandhan Bank, but maintain a positive view given the fact that valuations are cheap. So largely brokerages have cut target price anywhere between 6% to as high as 18%. Back to you.
Got that, Abhishek. Thank you very much indeed. Let's actually shift. I just want to remind you that we will be speaking to Mr. Chandrasekhar Ghosh, Manager and CEO and founder of Bandhan Bank, on their Q2 earnings at around 9:30 today. So please stay tuned in for that, and he'll be perhaps able to clarify a lot of doubts that you have. We get to the stock that's likely to do very well. Tata Power is opening 1.5% higher as of now in pre-open. Vivek, tell us the highlights. You were impressed by some of the takeaways.
Well, absolutely. It's been a record in terms of the Indonesian coal mining profits. However, analysts have highlighted a few concerns. So let's have a look at that as well. Overall, it's been a strong quarter, much above, what the poll was anticipating. So clearly, number front, operationally strong. However, what's actually being highlighted by analysts is the fact that majority of the profitability has come in from contribution from the Indonesian coal mining business. And also at this point of time, brokerages like CLSA are a little worried about the valuations. In fact, what CLSA is saying is that at this point of time, they do not see further significant upside. They believe that the stock has run up ahead of its fundamentals, and they believe that the key reasons for this run up has been the fact that there has been retail frenzy as far as the stock price is concerned, a spike in coal prices aiding profitability. They believe that this may not sustain for very long. And also, the nature of the strategic stake sale as far as the renewable energy arm is something that has actually gone ahead and aided the near-term spike as far as Tata Power is concerned. However, it's an operational beat, and it'll be interesting to see how the stock performs.
Okay, all right. Thanks a lot for that, Vivek. Well, let's go to Sonal. She's here to track Maruti post the con call. Sonal?
Thanks a lot for that. Well, strong set of numbers reported by Maruti on Friday, and in that conference call as well, the takeaways are quite positive. The company says that increase in realizations this time around was because of price hikes. They are seeing a higher share of Brezza sales and the new Alto as well. Their order book currently stands at 412,000 units at the end of September 2022, out of which 130,000 is from newer launches, something like Brezza and Grand Vitara as well. Order book also remains strong for Ertiga and Baleno models, and they are planning on launching new models in the SUV segment in coming quarters as well, and that is the big takeaway from their conference call. There is no slowdown seen in the export markets according to the company, and they have guided for a capex of 7,000 crore rupees in FY23 itself. However, they do say that yes, chip availability is impacting production for the company. In Q2, 35,000 units, the production of 35,000 units was impacted, and they could see some commodities inching up in Q4, while Q3 appears to be stable. On the back of which brokerages have upped their target prices. It'll come up for you on your screen.
Okay, thank you very much for that. We noted that 12,000 rupees plus are the price targets, and the stock is up 1.5% at this point in time. Market about to open, looks like a good opening. Okay, it's as good as the pre-opening indicated, so it's a 0.7% or 130 point jump on the Nifty, 17,925 as I speak, make it 927, 929. So there it is. It's a 0.8% uptick, nearly a 150 point jump. Sensex as well keeping pace, about a 500 point jump, and it is 60,470 almost on the Sensex. The Nifty Bank is the outperformer. Well, not quite, because now even the Sensex and the Nifty are up 0.8. So Nifty Bank shoulder to shoulder up about 0.75. That's a 318 point jump, and it's 41,320 on the Nifty Bank. The mid caps are actually doing well. A slight underperformance only, but still it's giving it a very good advanced declines. The index itself is up about 2/3 of a percentage point, and it's 5 stocks in the green for 1 in the red. The best performance coming in from Dr. Reddy's, expectedly so. It's like kind of broken all expectations on revenue, EBITDA, margins, just about everything, up about 1.7%, closely followed by Hindustan. Okay, HUL has now become the top gainer. That stock is up about, again, 1.6%. Infosys, Tata Motors, Tech Mahindra, HCL Tech, all the tech stocks are higher. And Mangalam, you pointed out that probably if the global markets do well, then tech stocks should get a leg up. And that's exactly what's happening at this point. I mean, Infosys, Tech Mahindra, HCL Tech, all of them among the gainers. I don't see Maruti at this point in time. Can we pick up Maruti? It is up 1% or 0.7. Yeah. So not quite among the top gainers at this point, but I guess it'll pick up speed. It did a bit of rallying already in the past week. Past week it rose very sharply. Yes. Among the losers, it's only NTPC, and that was expected. It was kind of slightly below the bottom line. The EBITDA did disappoint the street. But mid-caps, what is what's selling out?
Intellect Design, we just had a chat with the management. They said that you should be looking at the margins on a 12-month basis. However, for the past quarter, it was very disappointing. The stock has got clocked back, close to around 7%. Bandhan Bank, well, it's seeing some further selling pressure. It's down another 5% in trade today, so that clearly one is getting a bit of a knock. Vedanta is, the numbers are more or less in line. It's pulled back close to 100%. Some part of the street was hoping something on the dividend front, I'm guessing. So that's why that stock as well is down close to around 1%. But mid-cap IT actually is doing very, very well. Mindtree is up 2.5%. L&T Infotech is up close to around 2%. Persistent Systems as well as Coforge and Birlasoft. I'm looking at the top F&O traded stocks, and all of them actually are mid-cap IT names, which are doing very, very well. All of them, some of the top gainers as we speak. A couple of other stocks that are moving well. Well, Infibeam, it's seeing some follow-through buying post the big run that we saw on Friday. It's up close to around 8% as we speak. Genius Power is up close to around 4%. It had a good week last week as well, that smart meter play. So that's doing pretty well as we speak. So pretty good opening. For starters, we're up 150 points. The bulls will take that. The mid-cap index is doing a relative underperformance. in comparison to the Nifty, but still the breadth of the market is way in favor of the advanced stocks than declining stocks. Mangala, what else?
Well, I'm looking at a bunch of stocks here this morning as well. Satin Credit Care came out with its numbers during market on Friday, and now we have a 5% decline out there. VIP continues to do well, so that is one stock that I'm watching out for. Decent numbers coming in for them, and the management had guided for good performance going forward as well. Some bit of pickup in LIC as well, up almost 3% as we speak this morning. Blue Dart. Now, that's an interesting one because the results were not so good and the street expected, there would be some weakness in the stock price this quarter, but maybe the street is looking ahead in the third quarter where the festive season sales would come by, and the company has also announced a price hike with effect from December. So maybe they're ignoring the past quarter and looking at the quarter ahead. And the final stock that I'm watching out for is Nykaa. Nykaa has actually crossed that 1,000 rupee mark on the upside, seeing a bit of a bounce back after the drubbing that it saw all of last week. There's been an interesting development there. The company has gone ahead and postponed the record date for bonus shareholders from November 3 to November 11. And that is interesting because between November 8 and November 9, remember, is where the pre-IPO lock-in opens, and there was fear of a lot more supply. Maybe the supply would have been over-exaggerated had the stock gone ex-bonus as well, because there could be incremental selling of those who would be stripping the bonus off. But that has been postponed, and the company reports its numbers tomorrow. So let's see where that goes.
Okay. And Nykaa, I thought last week was also getting a drubbing because e-commerce stocks in the US were getting a drubbing. Most of them Amazon types did not perform very well at all. So there was that shadow as well, besides, of course, the removal of the lock-in and the impending expected selling. Today, a bit of stability there, perhaps also aided by the global comeback of some of these stocks. But we have an expert joining us, so let's toss it straight to him. Our market master for the morning is Harsha Upadhyay, the CIO Equities at Kotak Mutual Fund. Good morning, Harsha. Pleasure having you with us. Diwali greetings. We didn't speak to you thereafter. But first, it's like Diwali in the market. Do you think the index has a lot of legs to run, cross 18,000 and more, given the global tailwind as well?
Good morning, Lata. Hope you all had a very good Diwali as well. If you look at markets, I think markets continuously have been very resilient compared to what's happening in the global market. And off late, we have also seen some of the global cues improving a bit, although there is going to be more volatility in the next few months, I guess. But nevertheless, I think the stability in the global markets has also aided the Indian markets, wherein the earnings have come more or less as per expectations during this quarter. And that lends a bit more stability to the markets, I would say.
Okay, hi Harsha, morning. I recall the last time we chatted, I think you were leaning towards being positive on some of those passenger vehicle segments as well as the auto segment. Maruti's numbers look good. What do you do from here on? That auto rally has played out quite a bit, but do you believe it still has more legs?
Yes, Nigel. I think overall, when you look at auto segment, there is some more steam to go ahead, I believe. Most of the segments are seeing strong volume growth. The commodity cost pressures are easing. And for passenger vehicles especially, we are also seeing chip supply improving a bit. And we have seen a lot of new product launches on the passenger vehicle side, which have also garnered very good interest from customers. So overall, it seems like the volume growth that we have seen in the recent past should continue with the same momentum over the next few quarters. And margin should also improve as we go ahead. Okay. And we believe that the valuations do not factor in all of this upside as yet.
Okay. Yeah, it's got not just more legs, more wheels, I guess.
Accelerator.
Room. Yeah, they are vrooming. But Harsha, I want to ask you about the e-commerce stocks. Nykaa today, after a decent amount of drubbing, is in the green now. Where do you stand on the e-commerce stocks? Of course, many of them have this immediate lock-in issue as well. But would you pick some of the good businesses in the dips?
Clearly, valuations have been expensive for most of these e-commerce businesses as compared to traditional business models that everyone agrees. As far as what's getting factored in the markets now is the fact that the lockups are going to end very soon, and that's going to lead to possibly more supply coming in. And that's what is creating an overhang. And most of these stocks which are coming up for lockup opening are seeing that kind of pressure. Our guess is if you are confident on the business, then you should be looking at purely from a bottom-up basis, not just that every e-commerce stock is the same in terms of business model or valuation. But I guess you will have to evaluate each one separately.
Right. Let's talk about a couple of these global-facing stocks, Harsha, because you have indicated in the past that the global economy is challenging, and data suggests that so. But do you think we are closer to the end of the challenge, or perhaps better off than what we were, say, about 6 to 8 months ago? And in that context, would you look at any of these IT stocks which have underperformed? And Dr. Reddy's as well, the top performer on the Nifty today after a strong set of numbers.
Mangalam, we continue to remain underweight on IT sector. Yes, in the very short term, the global cues may lend some stability to IT sector. However, we believe that 2023 IT budgets would be softer than what most participants are expecting. And even when you look at management commentary of the recent past, it seems to indicate that there are pockets of weakness in terms of various user segments such as retail, mortgages, discretionary, high-tech, etc. And our belief is more of a weakness would be seen as you go into 2023. While margins have held up until now, but with weakening demand, you could also see some pressure on margins. So overall, we continue to believe that some of the domestic-facing sectors will have much more room for a re-rating if markets continue to do well rather than IT sector. Okay. And similarly on pharma, we continue to be very stock specific. We are not really looking at a very top-down kind of a stance on this segment. Both of these segments overall remain quite underweight.
Harsha, if we're looking at domestic-facing themes, we discussed the auto space. The consensus buy is on banks. And I think you all have been positive as well on both those two sectors. So let's talk about the banking space. If credit offtake is going to improve, the worst of asset quality is behind, at least in the near term. Would you, go further down? I think earlier you all were positive on the large private sector banks. Do the PSUs deserve a second look? Because that's been actually the best theme that has played out. If I look at it in the last 1 month or in the last 1 year, look at it on a longer term horizon, well, they haven't made much money. But do you believe that these PSU banks, they could re-rate from here?
Nigel, we do have some exposure to PSU banks and they have done well. And one of the usual concerns on this segment was how treasury yields would move and whether it will impact their treasury income, etc. But treasury yields have been broadly in a range, and I don't think that's going to really negatively impact some of the PSU banks, at least in the immediate term. And as far as the cost of funding is concerned, they have a very good cushion in terms of CASA levels. And we continue to believe that that is going to be a critical factor, especially when interest rates are moving up. If you have low cost of funding, that's going to aid margins. And as you rightly mentioned, asset quality issues are behind us, and even credit growth is improving month on month. So overall, we continue to remain positive on the overall banking space, and within which we are positive on large private sector banks, which have very good CASA on their books, and also the large public sector banks.
Public sector banks, you said. So a handful of them.
We do have a couple of them in our portfolio.
Okay. Now, the whole point is whether you will go down the couple. Everybody has a buy on SBI and BOB. That's why I'm asking you if you will go down the line. I mean, I think that was also what Nigel wanted to know.
Yeah. No, Lata, we would remain in larger banks because that's where we will have stability in terms of CASA.
Okay.
Right. You have thoughts on urban consumption? I mean, how would you look at names like Trent or maybe the QSR space or something like an ABFRL? Basically, retail as well as urban consumption, QSRs, etc.
Urban consumption continues to be quite strong. We have seen that during the festive season, as well as you go forward, we expect that to continue. Rural is still somewhat weaker as compared to urban demand, we would say. However, each of these pockets are very, very different in terms of drivers and the valuations. So we'll have to evaluate each of them differently. But broadly, urban consumption continues to be quite okay.
No, one quiet performer have been the power stocks. NHPC, I think for the first time in its life, passed its issue price decades ago, and just climbed very fast. And likewise, we've seen a decent performance of Tata Power, though that's been more volatile. Power stocks, any thoughts?
Lata, it's not been a very big focus area for us, but we do have a couple of names in our portfolios with small exposures. Continue to have that in our portfolio as we don't see too much of re-rating from these levels for some of these power utilities. But yes, they will give you stability in the overall portfolio context.
Okay, actually, we've been asking you, throwing sectors at you. You tell us what is your hierarchy.
We have been positive on banking and auto, as I mentioned earlier. We also have overweight position on industrials, where we believe that investment cycle after a long time has been picking up, and some of these stocks have very good order book, and balance sheets are also very healthy. So we should see a decent re-rating from medium to long term. We are also positive on many of the other manufacturing segments, such as cement, chemicals, etc., where we believe that we continue to see growth, and margins should also start improving from here onwards as commodity cost pressures are going down. So broadly, most of the domestic facing cyclical sectors is what we are focusing on at this point of time.
Okay, well, we will leave it at that, Harsha. Have a great Samvat 2079. Thank you very much for joining us today.
Thank you so much.
Well, we have to move to one of the most important results that was announced over the weekend, Bandhan Bank. Actually, the results had some elements of weakness. There was rising stress that one could see hitting the performance of the numbers. And slippage is high. Let's get straight to the management. Joining us now is Mr. Chandrasekhar Ghosh, the founder and the managing director and CEO of the bank. Good morning, Mr. Ghosh. Thank you very much indeed for joining us. Well, I have to start with the difficult part of the results, which are really the slippages. To what extent can you say they are one-off? Some of them are from your watch list, but not all of them are from the watch list. There are even outside watch list slippages. Just give us a good perspective on what to expect going forward.
Good morning.
Good morning, sir.
Thank you for your time. The slippage actually has come from the pandemic time. Whatever we have given the restructure to the customer, that amount has come now in this quarter, because the two tranches we have been given the restructure. First tranche has come demand in a 1st April, the last quarter, which has come to this quarter as a NPA, and second tranche has come also in the 1st July, so which is now in a different bucket, or some slippage is there. So for that reason, decision slippage has come. We know that this will come on that. And accordingly, we are also making a higher provision in the last year, second quarter, which have been shown that the loss in that time.
Okay. All right. Mr. Ghosh, give us some more color then. The slippages from the watch list and from the non-watch list, both of them were higher. From the non-watch list, it was around 1,200 crores, from around 800 crores. From here on, what should that number be like? On a quarterly basis or on a yearly basis, if you want to give us that number?
If you see that the pandemic, whatever heated in the ground level, so one time we have been taken that all cost, but a normal sum of this, the slippage will come. Yeah. It is now coming on that the 500 to 800 crores has come to this the quarter basis on that. So when the second and third quarter will come, which the business growth level is coming very high, that time also these customers who are paying, that is a partial installment, they will be like to come full installment paid and taken a loan. For that time we have been given to them. For that reason, we are feeling that the next 2 quarters is a very important for us. And we see the trend in the before pandemic and pandemic last year time also. It has given the very good improvement of this, the NPA slippage on that.
So basically you're saying that emerging entrepreneur vertical, you are not washing your hands off. You still think they can pay back?
Majorly the portfolio is in group loan, and which is a small ticket size, but in the bottom level of the customer whose the business have been stopped in the time of pandemic.
Okay, right. Let's talk about loan growth then. I mean, you were guiding for 20-25% of loan growth in the year. The first half, we've seen a negative loan growth. So for you to actually go ahead and meet your guidance, you'll have to grow at around 25-26% in the second half of this year. Do you think you will be able to do that? And at what margins would you be able to do that? Because your net interest margin too is near all-time lows.
No, if you see that this quarter also year-on-year basis, our advanced growth has come 22%. Because of some amount have been write off. For that reason, it has been showing to the 17.5%. So if it isn't showing on that, the second quarter is a 22% of the advanced growth. The next 2 quarters is always given the higher growth rate of the advances. So we have the confidence on that. The next 2 quarters, it will be like to cover on that the 25% growth of the business.
Okay.
And if you look another side on that in the bank, the non-microcredit loan has come as a 52% year-on-year basis growth. So diversification also happening in the bank. It will be given the very good portfolio quality risk point of view, which is in that said that the secured and unsecured will be better way.
Okay. So Mr. Ghosh, short point, you're sticking to 20-25% loan growth for the year. Is that correct?
Yes.
Okay. All right. Let's focus on the other point then. The NIMs, they have come down to around 7%. I'm looking at your CASA, and even if I club it with the TDS, that's the term deposits, that's come down a little bit. So your cost could go up. What is the steady state NIMs are you looking at from here on? If you could tell us that number, point number one. Point number two is credit cost. I think you were guiding for around 2.5% earlier. Now that'll have to be revised, right? What is the new revised credit cost guidance?
There is first the point of that the NIM. NIM are always we are looking on that the 7.5 to 8% is our targeted, and will be like to reach.
Okay.
Why it has come to this the 1% bill? Because of we are booked this is a restructured loan as a NPA, and we reverse the interest. For that reason, it has come 80 basis point down, and normally it has come to this the point of the nearly of the 8%. So I have the confidence on that. The next 2 quarters it will become to the normal of the our NIM. If I come to the deposit point of view, deposit as a growth has come 21%, and if we see that our CASA has come 41% of the total deposit, some CASA little bit has come down. Because of that, because of interest rate increase in the bulk rate increase and the fixed deposit rate increase, so some of the customer transferred their savings account the balance to the fixed deposit box. So that have been come little bit on that, but I hope that we are not feeling any liquidity issue. So next 2 quarters we also cover on that and as a deposit.
Right. You said that slippages will continue into the next couple of quarters as well before things get better. Can you give us a sense of what kind of slippages can we expect in the next couple of quarters? An absolute number perhaps, a range if not?
No, if I say that the slippage is a 2 types of slippage. One type of slippage which is a normal credit. Another type of slippage which I already booked, which is called the restructure loan. So normal slippage, it is in 1 to 2%, it is always booked on that. So because of some slippages come from the restructure and the pandemic portfolio, so that the bank has a feeling about that it will be 3% will be like to end of this year. But normally it will be 2 to 2.5 our credit cost.
So credit cost will be 3% for this year, and for FY24 you're guiding for around 2 to 2.2%. Is that correct?
Right.
Okay.
Okay. Mr. Ghosh, are you looking at any other inorganic moves? You'll have done a lot of them in the past couple of years. Anything else that you want to expand into?
No, we are now focusing on that. You see that the Gruho we are already taken, and the Gruho loan is very good way now given the growth of the bank. So we are focusing on that. And we are also focusing MSME growth internally. The very good setup we have been built up, and that is also given to this 96% growth of the bank year on year. And retail also given 111% growth. So bank feeling that other than micro, all the vertical are set up in a good. And across the country, we are seeing that the very good demand. So we are trying to capture that demand by the channels. So that will be helpful for the bank for that. No inorganic growth.
Okay. Got that, Mr. Ghosh. Thank you very much indeed for joining us with a bunch of nuances on your slippages, on your expectations of growth other than in the MFI sector as well. Have a great year ahead. Thank you for joining us.
Thank you. Namaskar.
Okay, well, just a word on the markets at this point in time. Still, holding on to the gains and building on them. Actually, we've not seen an early morning dip at all, a first hour dip. It's actually building from strength to strength, and the mid caps have also caught on, actually.
Absolutely.
Doing a little better than the Nifty Bank.
Okay, all right. Well, also from the broader market, I just want to point out a couple of stocks. These are headline, FNO stocks, so big volumes out there. Trent, that's spiked up to the high point of the day, up close to around 4%. The mid-cap IT is having a very good day, as we said earlier. And Vedanta, no worry with the numbers, actually. The stock was down 2% at the start of trade, maybe some profit taking because of hopes of some dividend. But that's moved into the green as well. So keep an eye out on that one. For the time being, we'll slip into a short break. But on the other side, we'll be joined by Prashant Jain, Joint MD and CEO at JSW Energy, to discuss their past quarter numbers. Later on, we'll also be joined by Parveer Sinha, the MD and CEO at Tata Power, to discuss their quarter numbers and the way ahead as well.
Well, looking good for the market. We do have a bunch of stocks which are actually moving to the high point of trade. Titan is one from the frontline space which is now spiked, and M&M is the other one which actually is doing extremely well. The last week belonged to Maruti, but remember this year M&M has been the top performer in the auto space, and now we've seen a bit of a spike out there as well. So all these things, what they've done is they've taken the Nifty closer to that 18,000 mark, just 30 points away from there. Let's see whether the shorts cover their positions or not, how they feel when the Nifty appears closer to that 18,000 mark. But let's talk about some more numbers. JSW Energy, that posted an operationally muted set of second quarter earnings. The company saw weak merchant power demand. Also, the margins did contract to around 37% versus around 45% in the last quarter. Prashant Jain, who's the joint MD and CEO of the company, now joins us. Thanks a lot, Mr. Jain, for joining in. Season's greetings to your team, your family. There was weak merchant power demand, as we see. I mean, can you give us a sense of the average realization trends at merchant power stations, and also the price at which you are acquiring coal? That's been volatile too.
Good morning and happy Diwali to everyone at CNBC and your viewers. So in the quarter gone by, of course, we have seen our margins going down, but the margins are reflective of the fuel price, and actually the fuel price have gone up, and because of that the margins came down. For the quarter, we saw the power demand had moderated to 5.7% during the quarter, whereas the previous quarter, that is Q1, the power demand grew at 18%. And that was also reflected in the lower volume in the merchant market. The overall Indian merchant market was down by 18% in the Q2. And the prices also moderated to 5.7 rupees per unit. And that the coal prices are still running pretty high at $330, and because of which the fuel price for power generation is pretty high, and at 5.70 rupees, it is not economically viable for most of the generators to pump in more volume.
Okay. All right, Mr. Jain, short-term sales of electricity and its contribution to profit, it's narrowed significantly if I look at the last few quarters. What's the plan to convert the non-tied up segment of thermal? Do you plan for medium-term PPAs?
So that's true. Power is predominantly a long-term supply agreement business, and that's what we have been doing. At one point of time, we were having more than 60% power in the merchant market, and today we are only having 14 to 15% open capacity, which we would like to tie up in due course of time. And so we always look forward for such kind of opportunities, and then we are seeing some opportunities within the group also, where JSW Group is doing the expansion in the steel and cement business, and we will be tying up such kind of a capacity in next 24 months time frame. And incrementally, whatever capacity which we are building in the renewable space are 100% PPA tied up.
Okay. Mr. Jain, good morning. What is the situation in terms of receivables from DISCOMs?
Good morning, Lata. So for us, it has been pretty good. Our receivables came down by 19%, and we are running our receivables at 66 days, which is one of the healthiest receivable for our company as well as within the sector. And I think leaving aside the generalized situation, there is a better business environment in terms of the receivable or the sanctity of the contracts which have been prevailed by various adjudicating authorities in various forums. And we are seeing that the trend will moderate going forward, and you will see the receivable for the sector also will go down over a period of 24 to 36 months.
No, that's extremely positive, because that used to be the biggest hurdle for the power sector. Also now on your EBITDA and margin fall, one can understand coal cost. Was that the only reason?
So margin, we need to look at that fuel prices pass through, and fuel price have gone up by more than 120%. So that's why EBITDA margin as a percentage of sales revenue will be looking contracted, but actually EBITDA is not contracted. And that's why if you see in the absolute terms, the EBITDA is up by 2%. And so in spite of the lower volume, so you need not to look at as a margin.
No, but margin is still lower, no?
Yeah, margin will always be lower in case the fuel price will go up, because we are getting the a fixed cost which is for the for supply of power.
Okay.
So if fuel price is going up from 3 rupees to 6 rupees, and if I'm getting a EBITDA margin of 1 rupee 30 paisa, then my EBITDA margin of 1 rupee 30 paisa remains same, but the denominator, because is...
No, I get your point. I get your point, sir. I'm just wanting to know whether for the second half also, therefore, the 35, 37 is more likely margins rather than 40 plus.
So typically, if the fuel prices are remaining at this level, then you will be seeing the 40% plus. But if the fuel prices further go down, then you will be seeing closer to 50%.
Okay. Right. So let's talk about things which are in your control. The first one is the status on the Mitra acquisition. I mean, what kind of synergies have you realized already? How much can come by going forward?
Mitra acquisition, we are expecting to close within the current quarter. And however, as per the transaction, the balance sheet belongs to us for effective 1st of April 2022. So you will be seeing when we are going to consolidate the balance sheet effective when we conclude that transaction, you will be seeing our EBITDA will be going up. There are various operating synergies which we have, as we explained, that we are looking close to 300 to 400 crores kind of a synergy which we will be bringing by various operational efficiencies and optimization of the assets, which will be reflected from 12 to 18 months time frame post our acquisition.
Okay, all right. Mr. Jain, a longer term question I have for you. JSW Energy's market cap's around 54,000 crores. I think the profit estimate you had given by FY30 is around 4,800 crores, right? Now, given the current situation on renewable energy, coal, development on green hydrogen that you're talking about, do you want to revise that FY30 profitability estimate that you had given earlier?
So Nigel, look, we have given two targets. One target we gave for FY25, where we said that we will be at 10 gigawatt capacity and 20 gigawatt capacity by FY30.
Right.
But if you look at what we have already locked in the capacity for 10 gigawatt, we are going to complete that in next 18 to 20 months time frame.
Perfect.
So we are going to achieve our FY25 guidance probably one and a half year earlier. And that's what will be reflected in the numbers also going forward. In addition to that, there are new business opportunities which we have already opened up in terms of the storage application. Like we have already got 1 gigawatt of the world largest grid lithium-ion battery storage solution, which we have won from SECI. And
right, Mr. Jain, Mr. Jain, we're running a little short on time, but wanted that FY30 guidance. Do you want to revise that number? You're putting a lot of effort in, moving into the renewable energy space and the other acquisitions that you've done as well. Give us a number. FY30, what should it look at? Because otherwise, it'll be difficult to find deep value with the market capitalization at such elevated levels. Go ahead.
Yeah, so step by step. So you will see, as I was trying to make out the point that we are trying to achieve things earlier. So at some point of time, we will be looking at revising it, but we will do it step by step. We want to concentrate more on execution at this point of time.
Okay. Well, we were hoping to get a number from you, but thank you very much, Mr. Jain, for joining us. There's lots to discuss, but it is height of earnings season, so we have a lot of managements lined up. We will take a rain check and speak with you later.
Thank you.
Okay. Well, from one power company to another, outstanding performance coming in from Tata Power. Strong set in the second quarter, well above street estimates. The company has clocked in a sharp improvement in the Indonesian coal mines as well. EPC margins have done well. Discom earnings have done well. Joining us now is Mr. Praveer Sinha, Managing Director and CEO of Tata Power. Good morning, Mr. Sinha. I mean, I rattled off all the brilliant performances, but let me start with one that's obviously not done well, which is margins, and I guess that's because of coal cost. Can you give us an idea of how margins might pan out for the second half?
Good morning, Lata, and first of all, happy Diwali to you and all the viewers. I think you rightly mentioned revenues have gone up, EBITDA has gone up, PAT has gone up. And there has been some pressure on the margins, primarily because some of our EPC projects, which we were anticipating to close during the quarter, we could not do. We expect that now we will be able to close it in Q3 and Q4 and ramp up our margins in EPC projects. Also, some of the cleaning up that we are doing up in our distribution business, especially in the Odisha Discom, all those results will start coming in the subsequent quarters. So there's a lot of cleanup that we've done. We've changed meters, the collection has improved, but many of them are still work in progress, and we will start seeing the benefit of it. Our rooftop business, again, there were supply chain issues. Margins were impacted in the first quarter and second quarter. But subsequent orders that we have got are very good orders. We've got a great order backlog, and which we will execute. So I think what we need to see is in terms of what are the foundations of the company and directionally where we are going. And if you have seen, this is the 12th consecutive quarter of growth in PAT, and we are only improving every quarter and improving our performance. So I think we are in a very good we have a very good momentum and very good track, and we'll be only improving from what we have been doing in the past.
Can you tell us about the Mundra, legal position? You're able to collect extra costs, but it looks like it's a temporary, SOP. When are you expecting that it will be, full and proper?
So I think Mundra, some of the issues have been decided in the interim order from CRC, and the final order is awaited in November. And I think whatever gets decided, especially in terms of the cost pass-through for coal and the fixed cost and the capacity charge, all that will become the future baseline for which the supply will take place. So this is the reality which will get established going forward. And since it's decided by the regulator, it will get implemented and accepted.
But the interim is a full cost pass-through?
Right now, they have said that, but we are waiting for the final order, and we will get to see what is the final arrangement approved by the regulator.
Okay, all right. Mr. Sinha, since you touched upon Mundra, let's focus on that. What's the under-recovery from the Mundra unit? What was the loss that was booked in the last quarter? And if you could give us a timeline, when do you expect the CERC to revert back on that section 11?
I think CRC has already heard the matter, and it is reserved for order. So I do expect that in next 4 to 6 weeks, we will get the order. Right now, there is a difference between what was the interim tariff, which was notified by Ministry of Power, and what is the actual cost. Once that gets determined by CRC, that will be the way future transactions also will happen with all the beneficiaries. Because mind you that Mundra continues to be one of the low-cost producers and continues to be one of the biggest suppliers of electricity to Gujarat and some of the other states also. So the necessity of Mundra is there, and with the type of increase in demand that we are seeing in our sector, this will continue to supply reliable and efficient power to all consumers in future.
Okay, Mr. Sinha, can you give us some perspective on the EPC? You said some orders that you expected you would book could not be booked in second quarter. Give us a 360-degree perspective. How much are you expecting by way of revenue there, and how much in terms of margins? What's the order book looking like for the future?
So just to give you an idea that the steel prices and the other commodity prices had gone up in the last, I would say, about a year. They have come down by nearly 25% in the last quarter. And we have now gone and booked all our requirement of steel, copper, aluminum for the coming year. So the impact is a 25% saving in the cost of steel items and the other commodities. Similarly, the module prices, which we were importing from China, had gone up to 26, 27 cents. It has now come down to 23 cents. And we expect that in next few months, it will come down to 20, 21 cents level. So that's the upside that we will get. So what we did, instead of doing all these projects in the first and second quarter, we have deferred it. And we have also taken up with the government of India, which has agreed, and also the beneficiary, that you can stagger the implementation of it. And that, I think, will help us to complete these projects in the next 2 quarters and take the benefit of higher margin.
Right. Just wanted to understand a couple of things. Since you said that Odisha will now start reflecting in terms of better performance from here on, I see the distribution losses out there have reduced by about 500 basis points. Going forward, how much better can they get from here on? And the second one is with regards to the renewable energy, your EV business. How big will that be, say, the next couple of quarters before we talk about your long-term targets there?
So Odisha, we have done a large-scale cleaning up in terms of there were a large number of meters which were not working or were legacy meters, electromechanical meters. Okay. We've changed nearly 20 lakh meters out of the 90 lakh meters. And that has helped us to bring down the provisional billing, which used to be something like 40% to average of 20%. In some cases, it has gone down to 10%. And we expect that the 500 basis point reduction, similar amount reduction will happen in the next quarters. So we really expect that the full benefit of Odisha Discoms will start coming in the subsequent quarter. And in FY24, you will see a substantially better results coming out of Odisha. Similarly, in our EV and other businesses, where again, traction of electric vehicles has not been so much, notwithstanding the fact that it has increased from a base number. Once the penetration of electric vehicle takes place and utilization of these chargers takes place, I think we will see huge improvement in the margins also of our EV chargers. Of course, in our home chargers and public transportation for buses, it has done well. But in the public chargers, we still have to see the type of usage that will make them self-sustainable.
Okay. Mr. Sinha, for the benefit of investors who are watching you, some numbers, what is the breakup in terms of revenue? How much comes from thermal, how much renewable, and how much from your EPC and Discom businesses? And if you can give a rate of growth for each of them, whatever you can perceive in the second half.
Yeah, so I think earlier, traditionally, we were 1/3 each in our transmission distribution, conventional generation, and in our renewable business. Now it is moving more towards our T&D business and renewable business. So what we are seeing is our renewable business and our T&D will become about 40% each, and our thermal and hydro will be about 20%. So that's the type of change that we are going to see. You've seen that in 2 quarters, our revenue has become nearly 28,000 crores. If you remember, a few years back, our annual revenue used to be 29,000 crores. And that's the type of trend change that we are seeing. And this is primarily happening because of the huge renewable focus and the huge focus on distribution and transmission.
Okay.
So going forward, we will see that sort of trend. And we have shared the numbers in terms of long-term projections, and I think we are committed to those numbers.
Okay, all right. Mr. Sinha, very quickly, you all had plans to quadruple the net profit in FY27 if you compare it with FY22. Now, you've given us a brief idea about the segment performance and how things are going to work out. What is there in this assumption? Do you assume that Mundra will turn around? And do you think that this coal profitability that you're seeing, which is, I don't know whether it's one-off or so, but it's looking very, very alarming, do you think it'll remain the same for the next few years?
I don't think coal will remain the same for coming years. And in our projections that we had given that we will make it 4 times the profit, we have considered a very muted coal impact. So it's not that we have considered the present impact of coal. We have definitely considered that Mundra resolution will happen partly on the lines that what we are expecting from CRC. So that has been considered, but we are definitely expecting a huge growth in our renewable business and in our T&D business. So if you see again, we had last year we had a profit of something like 2,200 crores. In 2 quarters, we've already done 1,800 crores. And this is much more than what we traditionally used to do for many years, where we were about 1,200. So I think we are very much on track to make it 4 times our profit. And I think we will deliver on that.
All right. Take that point, Mr. Sinha. Always a pleasure speaking with you. Wish you good luck for the coming quarters. Also, once again, season's greetings to you and your team. That is the management of Tata Power. The next 4 to 6 weeks, crucial, because that is when we will hear any sort of commentary coming in from the CERC on the Mundra issue. With that, we take a short break. On the other side, we have the management of SBI Card joining us.